Yes, absolutely, but not in the same way as the US because the stocks that we have here, the companies listed are more on the infrastructure side. But as you know, we don't have as many, we don't have the hyperscalers, for example. But there's definitely moments that are moving the markets around those stocks for sure.
Are you concerned, Virginia, about what some people are calling kind of some of these circular type deals where company A invests in company B and company B buys company A's products
Yeah.
here? So you think about all the chips. That's got some people kind of scratching their head, I think.
I think it's definitely a risk, and I think it has to be monitored very closely. I think what's really important is the momentum behind what's going on in the real world with the capex. We're seeing this unprecedented capex boom, and it's the diffusion aspect of it. As you know, the digital Darwinism is on the competitive side, but there's also a lot of benefits, and you're seeing how industrial companies or even some consumer companies are benefiting from all those new technologies. So it has to be watched very closely. And of course, uh, interest rates are key in that environment. And seeing what AI is doing to rates is very, very important.
So the AI capex is certainly being a big tailwind for certainly U.S. GDP and to a lesser extent maybe global GDP. But I guess the real question is, are we going to get productivity benefits? Are we going to get returns on investment? I guess that's what the markets are kind of asking right now.
Yes, and it's a very difficult number to look at. Look at all the companies that are using AI. Some of the numbers that we have, and of course, they're estimated numbers, is that only about 8% of companies who are really investing in AI are seeing a meaningful impact on their P&L. So you have a lot of companies who are trying and not trying, or who are doing it, but not really well. That is the productivity lift. But the key thing I think that we have to think about starting 28, 29, 30, 31 is the impact on the job market. Because as we know, there's about 420 million people globally who work in those entry level white collar jobs. Those jobs are going to be impacted massively, and that will come across as productivity gain in the original phase. But of course, what we have to see is, can those people retrain to find other jobs in the workforce in order for the
Right.
economies to continue to prosper?
Okay, this is the heart of the matter. Virginie Maisonneuve with us, Jane Foley on deck here, I believe, from London. Virginie, the heart of the matter, which you just voiced perfectly, is they got to go out and find new jobs. We failed at that with textile workers in the Carolinas. The jobs went to Asia, the jobs went to China. Do we need to insert government programs in here as we go along with AI, much as Germany has done over the decades?
You know, that's a really, really good question. I think the effort will have to be coming from multiple areas, maybe government programs, maybe companies' programs to retrain their workforce and help them get to that next job. But the reality is, it's going to be very hard to take a teller, for example, in a
Right.
bank to become a data scientist overnight, right? And so it's also how we teach the skills. When you have basically machines who have knowledge at no cost that can give you answers, it's the critical aspect of how we have to train new students, if you want, asking the right
Right.
question, really questioning, etc. And so this is learning how to manage in ambiguous environment, uncertainty, etc. This is new skills. It's not so much about the knowledge itself than the process of learning and being an agile, having an agile mindset.